And fresh from posting 23.8 billion shillings in profit, the KCB Group is already casting its eye on further growth in 2015. The bank plans to grow its presence by leveraging on agency and mobile banking. Already operating in 5 countries in the East African region, the bank also plans to grow its regional reach. KTN's Agina sat down with KCB Group CEO Joshua Oigara for a chat on what he expects in the coming year.
You've posted an 18% rise in your pre-tax profits. Perhaps what would you attribute this to?
This year specifically, we are seeing more growth on our advances and loans. There's bigger demand of credit in the market. Credit is growing at 25% compared to last year across all markets. We're seeing more activity on our alternative channels, so our agency banking, mobile banking, and also we have a business which we introduced last year called a bank assurance. This business are growing by more than 50% compared to the same period last year. So as we enhance more customer numbers or increase them, that is being an opportunity for us to be able to enhance our level of growth in the business. We've also been efficient. So the last 2-3 years, we've been improving considerably our cost structure as an organization. If I look at 2012, our cost-to-income ratio was at 60, and now we're at 50, and that has also been a strong progression for the business.
The interest rates have been a source of concern for a number of Kenyans, and are we seeing the uptick going up as experts have pointed out?
Interests have come back from a highs of 22%, actually 24%, to now average at 15.8, 15.9%. That shows you that as the interest come down, it's more a volume business. More customers are able to access more affordable credit. I mean, I would say as large banks and as KCB, we introduced, for instance, the most competitive mortgage product in the market at 2.9 last year. And we do believe that that is what are going to accelerate the way credit increases in our market. 80%, 60% of our loans now are already been converted to the new reference rates. And by June, 100% of our loans will be on reference rate.
How would you describe how the various regional markets performed?
Kenya is growing much faster this year because it's becoming a big economy. It's growing at 5.3, 5.4%, most likely growing at 6%, looking at the IMF estimates. We see the other economies are also growing. All the countries this year are delivering a solid growth for us, except South Sudan, where we've seen slowdown of growth for the business. So for me, each of the countries, we're very excited for them. Uganda, Tanzania has been dramatic, growing at 55% compared to the same time last year. And that's, for me, is the way to grow the business.
Looking at South Sudan, you've mentioned that the performance wasn't that quite promising. In regards to looking at how you can redeem yourselves in that market, any plans moving forward?
We do take a much more catalytic role in where we are, like in South Sudan. For us, it's difficult, yes, but South Sudan has always been a difficult market.
Moving forward, which areas are we expecting to see more growth from?
But the biggest growth area you've seen is on micro enterprises. So these are businesses borrowing, let's say, at 100,000 below. Small and medium enterprises, these businesses are growing at 60% for us in the last year. We're seeing large borrowers in manufacturing, construction, and energy, tourism. And then we've seen the personal lending hasn't grown as much. It's growing at roughly 15%, but it's still growing. We're very keen about Ethiopia today. It's a key market. DRC, Somalia is another area we have. I've spoken about this for the last 2 years, and I think as time folds, we have opportunities, we'll go in this market.
You've been quite aggressive in terms of rollouts of innovative products, and one of them is in regard to the cash light. Perhaps, is this a key growth area for the bank?
Today, 98% of transactions, 96% are cash. We believe that in the medium term, we will never be cashless as a country. Our vision is to bring in some cash light, maybe at the level of 40% cash light, 60% cash, or 60% cash light and 40% cash. That's how we see the business going. And it won't take KCB alone. It will take the entire industry. We innovate that, but we're willing to. You see, we have many other banks running this, and we are working with Safaricom in this initiative. So we do believe that technology increases revenue by 30-40% in the same year as you invest into it. So if you look at our prepare or our transit card, as we call it, it integrates. It's not just about collecting money. Some of us don't realize that it's beyond. The owner also has been able to have a lot of access of information about the driver, the location, the fuel consumption, the drive. That is what the owner of the investor wants to know. Then there's a customer, you want to know you've paid and you got a notification. if this is almost a 300 billion shilling business or economy, as you talk about it. So if you can increase it and also enhance kind of revenue to transformation across the region or across the different players, we get much more money. I think for us, Cashlight isn't something that is short term. It is much more of a 3 to 5 year journey